Hello guys, this is Liridon from USADailyTraders.com, and today we'll be talking to you about technical analysis of the financial market. So let's get started. Before we go, it is important to know the philosophy between technical and fundamental analysis. So technical analysis is simply the study of market action primarily through the use of charts for different purposes, but mostly to forecast the trend of the market, or the price, or the direction of the market. Okay? Another one, market action includes three principles. It's the price, volume, and open interest. So open interest is used only in future and option. That's it. Market action discounts everything. Basically forms what's the cornerstone of technical analysis. As a technical, you shouldn't be able to think and perceive that the price can be moved by almost anything. Fundamentally, politically, and psychologically. Also, technicians rely very much on supply and demand as the basic of economic forecasting, like you learn on economics. If the demand exceeds supply, price should rise, or if the supply exceeds demand, price should fall. So the technicians turn everything around when they arrive at the conclusion that if the price raises for whatever the specific reason, demand must exceed supply, so fundamentally must be bullish. If opposite, fundamentally tell different, so bearish. Prices move in trends. This concept is essential to any technical approaches. The entire purpose of charting the price action of a market is to identify the trend as early as possible. So the earlier you get into the trend, it's better for your position. But you must be careful because sometimes it may be different. History repeats itself is a very simple concept showing to be very powerful. This aspect is concerned with human psychology, which relies on the past to analyze what is going to happen with the future. Future is some kind of repeat of the past. Most of the market has to come at the point where they all started. Let's get to the next slide. So we have two types of forecasting, technical and fundamental, which we will explain both and analyze both of them. So technical analysis study only the action of the market, versus fundamental analysis try to focus on economic forces such as supply and demand, or what causes the price to go down or stay the same. So the fundamental analysis analyze and examine the relevant factor affecting the price of the market in order to determine the value of that market. So basically it's the law of supply and demand, or that we hear a lot of traders saying that it's overpriced, overbought, or oversold. So it should be the opposite of that. So it's overbought should be sold, and it's oversold should be bought. So that's the kind of idea. There are two types of traders that they try to classify themselves as a fundamental or technical. Both of them are right. It's just the timing factor that